What's up guys, John here. Have you noticed what people are searching for lately? Look at this phrase, give car back. It's exploding on Google Trends. It's not a joke. People are asking the internet how they can give the keys back to the bank because they can't afford it anymore. Here's the crazy part. Nearly 1 out of 5 Americans with an auto loan, 20% of all auto loans are north of $1,000 per month.
Monthly payments are skyrocketing. 1 in 6 people who have recently financed a new car committed to monthly payments of $1,000 or more, the highest on record.
And that's just the payment. That does not consider insurance, gas, repairs, nothing else, just the car payment. This has become like a second rent check or a mortgage for most American families.
Nearly 17% of buyers shelling out $1,000 or more for a monthly car note, not including the cost of insurance. That's up from a little over 4% just 4 years ago.
And when you combine that with inflation and everything else going up, it's no wonder that Americans are looking for a way out. Now, how did we get here? Well, rewind a few years. Back during the pandemic, interest rates were at record lows. Dealers were throwing out loans like Oprah was cars, saying you get a car and you get a car. 7-year loans, even 8-year loans became the normal. And at the same time, most people had stimulus checks hitting their bank account. Some even gamed the system with false income verification and of course, PPP loans. Used car prices shot through the roof. In 2021 and 2022, dealers were able to sell used cars 3-4 years old for more than what they originally sold for brand new. People jumped in because why not? Cars felt like the new stock market. And for a moment, it looked like a big win. But here's the thing with cheap money. It always comes with a bill. Once interest rates started climbing and then inflation took off, that cheap car suddenly felt like an anchor around most people's necks. Fast forward to today, a car expense has become one of the biggest monthly drains on Americans' wallets.
Basic automobile is $50,000 or more.
Monthly payments are also close to an all-time high.
There are plenty of models that are going for more than $100K.
A record number of owners are underwater, paying more on their loans than their vehicles are worth.
Think about this. Roughly 20% of Americans paying more than $1,000 a month on their car payment exclusively. Now add in car insurance, which has skyrocketed by 50% since 2020. That's another $200, sometimes $250 extra every single month.
Car insurance has gotten expensive. The average annual premium for full auto insurance in the U.S. spiked 26% in 2024 from the previous year to $2,543.
Then gas, maybe $50 a week. That's another $200 a month. And don't forget about repairs. The cost to repair a car has skyrocketed since 2020 as well.
Repair costs are rising relative to the overall rate of inflation. From November 2013 to November 2023, motor vehicle maintenance and repair increased 4.1% per year, an overall change of 49.8%.
By the time you add up everything from the car payment to insurance to repairs and gas, many people are paying roughly $1,200 to $1,500 a month every month just to have some wheels on the road. That has turned into another rent payment or another mortgage payment. And here's the kicker. For most people, cars are a need, not a luxury. You can't just skip the payment because you have to get to work. You have to take the kids to school. You have to live your life, which is exactly why so many people feel like they're stuck in quicksand right now. And here's where it gets really ugly. It's not that just payments are high. It's that many people owe way more on their car than they're now worth. Right now, about a quarter of all trade-ins have negative equity of roughly $7,000. And for context, in 2006 and 2007, right before the great financial crisis, the average used car was about $8,000. That's how far we've come in America. Put yourself in that situation. Say you bought a car a couple years ago at peak bubble prices. Today, you go take it to your dealer, and the dealer says, we'll take the car, but you have to also write us a check for $7,000 to do so. And for many Americans, what that really means is they're trapped. You can't sell, you can't refinance. Every month, the situation gets that much more challenging. It's like trying to sell your house, except when you get to the closing table, they tell you to bring a fat check that you simply don't have. The key difference is that what's happening right now in the auto market is unlike anything we've ever seen before. This pressure isn't staying hidden. It's showing up in the system everywhere. Delinquencies on auto loans are now at the highest point in decades.
According to Experian, 60-day auto loan delinquencies at an all-time high of 0.99%.
Subprime borrowers, ones with the lower credit scores, they are hit the hardest. Over 6% of subprime auto loans are more than 60 days delinquent. That's worse than the 2008 Great Financial Crisis. And it's not just subprime anymore. Even prime borrowers with good credit scores are starting to fall behind as well. That is simply a red flag. Repossession companies are busier than they've been in years. Some auction yards are starting to fill up again, looking like graveyards for practically brand new cars. And this time, it's not simply people buying and selling cars for a profit. It's people that simply can't afford their payments and the lender has had to repossess. Younger buyers are especially vulnerable. Gen Z and millennials are falling behind at rates nearly 2 times of boomers. And when you're just starting out, losing a car isn't just a small setback. It will stay and show up on your credit report for upwards of 7 years. What we're seeing in the auto market right now looks a lot like what we saw during the Great Financial Crisis in housing. Cheap credit, inflated prices, risky loans, and now we're starting to see the cracks. The difference, in 2008, it was homes. Today it's cars, but the patterns are eerily familiar. People were told, don't worry, the money is cheap, everyone's doing it, values will hold. And then a few years go by, a lot of people are over their heads with their car payments, and now these loans are worth a lot more than the value of these cars. And then a couple years went by, and now their cars are worth a lot less than the amount that they owe on them.
Everyone knows the minute you drive a new car off the lot, its value depreciates. But for electric vehicles, the drop is dramatic. The average used car price for an EV fell nearly 32% in the past year, compared with a decline of just over 3% for gas-powered cars.
And it's not just gas cars either. A lot of people believe in Tesla and other electric cars, saying that these vehicles would hold their value. But these cars have depreciated a lot faster than most gas cars.
Some Tesla owners frustrated as the company lowers the prices on new models, making currently owned Teslas less valuable.
Right now, I am trying to offload my Tesla. I want to sell it because the value for Teslas has been plummeting.
Imagine buying a Tesla Model 3 for $40,000, $50,000, then going to cars.com and looking to see what comparable cars are selling for, and it's nearly half the price of what you just paid. That's a recipe for even more negative equity and more of a decision. That's a recipe for a repossession. Because when people see how much they owe on their car compared to what it's really worth, some people may see no way out except to hand the keys back to the lender. And don't forget about insurance. Since 2020, car insurance rates have more than doubled in 5 years. That's more than 20% per year of an increase.
Car payments have reached record highs in recent years, and Americans are feeling the pinch.
In the first half of 2025 alone, rates jumped over 8%, which means on average, most of us are paying $2,285 for maximum coverage.
That means even if you could afford the car payment, maybe you got a car payment that's comfortable, but you live in Florida and you weren't anticipating rising insurance rates, or Texas, or California, or Philadelphia, and then you start to see the sticker shock. Every year it gets more and more and more expensive. What's one to do? You add up all these pieces together, the car loans, the car insurance, the repair cost, skyrocketing rent, the inflation crisis around food and basic cost of living. It's a recipe for disaster for most Americans. So what happens next if this trend keeps climbing? We're going to see a wave of repossessions. Industry analysts have already said that over 1.5 million cars have been repossessed so far this year. And this, of course, is the highest point since the 2008 Great Financial Crisis. That puts lenders in the crosshairs. Banks like Ally, Santander, and Capital One all made billions of dollars pushing out these risky loans inside of this boom. Now they could all be staring at billions of dollars in losses if these defaults continue. And here's one big shift. Car ownership, rather than it being a given like it's always been, may soon look like a luxury. Think about it. If prices, insurance, and financing stays high, we might be heading into a future where fewer people can afford to own cars. Instead, it'll be subscription cars, ride sharing, or even companies owning the cars and renting access. That Business Insider prediction says that 80% of Americans will not own a car by 2030. At the rate we're going, it could be the opposite. Millions of Americans could lose theirs, and a whole generation of Americans could start to see car ownership how a lot of Americans now see home ownership, something one hopes for but can't really afford. At the end of the day, this isn't just about cars. It's about survival. Cheap loans and easy money made it feel like everyone could afford a brand new car. But now the bill is coming due, and most Americans are broke. Millions of Americans are drowning, stuck underwater, searching on Google on how they can give the keys back for that vehicle. If you're looking to buy a nice used car, there could be some great deals on the horizon. What do you think about this entire situation? Let's have a conversation about this below. Do you think Business Insider is correct in their prediction stating that 80% of Americans will not own a car by 2030? Here's the crazy thing. That article came out in 2017. Back then, that would have seemed far-fetched, crazy, unlikely. But now, I could see how we could get there. We have 4.5 years, roughly 4.5 years till we get to 2030. If we continue in the same trajectory, we're going to see a lot less people on the road. Let's have a conversation about it below, and I'll catch you next video.